Grow an actively managed portfolio of gold, silver, platinum, palladium, and rhodium with Auctus metals today.
And they're in the weeds. They're losing money. For the last 4 or 5 years, the Federal Reserve, who is supposed to send any excess money that they don't use after they create all of this funny money and put it into the system to the Treasury, and they haven't been able to do it for the last 5 years.
Hello again, everyone, and welcome to another Auctus Edge, where we look to give investors the edge they are looking for. I'm your host, Patrick Vieira. Lynette Zang, founder of Zang International, joins us today. Lynette, welcome to the Auctus Edge. How are you doing?
I'm very happy to be here, Patrick. Thank you so much for having me.
Glad to have you on. It's been a while since I've had a chance to speak with you or see you. And Zang International, I see you are growing, so I happily say to you, congratulations. And I want to first start off with the sentiment you are seeing with precious metals. Do you recall a time such as we are seeing today with the demand, the interest, the availability or unavailability of metals to stock the shelves?
The closest that I could say that I've seen to this particular period, although there are a lot of things that are changing that make it completely different, but I would say right around the 2008 period, it got pretty crazy there as the crisis, as the crisis was hitting. So I'd say I probably, it feels an awful like a lot like that pre-2008 and what's happening in the metals. But yeah, there's a much bigger shift that's going on right now that I'm personally very excited about, which is that shift from the paper markets in the US dictating price discovery, which is just a trading market. It's not real, to China's recent move on, I'm pretty sure it was February 13th, with that soft ban of using the metals as a collateral and then hypothecating them, taking out a lot of loans against them. So that's the start. Well, it's not really the start because it started a year ago in January when somebody in the US was demanding physical delivery and all that physical was coming over. That's when the shift really started. But with China's move just recently, that brought it up another notch. And I'm very excited about that.
Yeah, exciting times for sure. Lynette, from your observations, though, your observations, your conversations, is the move into metals one that's driven by fear, uncertainty, mistrust, or maybe monetary gains or an investment play? How would you sum it up?
Well, I would say that most of that is a loss of confidence, and a lot of that has to do with all of the chaos that we're dealing with and the shift in alliances. I mean, the world is a different place than it was 2 years ago, or a little bit more than a year ago even. Doesn't mean that it was the right place, because it was a different place prior to 2020 and it was a different place prior to 2008 as well. But yeah, I would say a lot of things are shifting. The world has lost confidence in the US leadership in the monetary realm. I mean, you look at all the chaos around the tariffs and what's going to happen with that now. Countries that have signed the deals are sitting there going, well, maybe I shouldn't have signed it. Is it a 10% tariff? Is it going to be a 15% tariff? Are the tariffs gone? No, the tariffs aren't gone. President has 7 different ways that he can tariff in addition to the one that he lost from the IEEPA. So, yeah, it's just a lot of chaos as we shift from one monetary system, the debt-based fiat monetary system, to the physical system, which is what China is pushing. And I'm so grateful, because we should have a true supply and demand market. But people don't realize the fact that the food they eat, the energy they use, the water they drink, the clothes they wear, everything is based on a trading market, not true supply and demand dynamics. So that shift is a very welcome shift for me personally. I'm glad to see it because it's more real.
Yeah, agree. We're definitely seeing it here in Asia, and I think it's fair to say that the uncertainty, it is causing a loss of confidence, and people look for a leader, and we'll see how this pans out.
Well, I wanted to also point out first, we saw the big spike in silver because silver is the fuse and it kind of indicates that loss of confidence, right? And silver is certainly a lot more volatile on the spot markets. And then gold is the anchor. And so that's why you see so much demand into gold is to your point from that loss of confidence and that uncertainty. What's this going to look like?
I was going to ask you that later on in the interview, but anyway, January 30th.
Oh, imagination.
Yeah, we'll get there though for sure. But going back just a few weeks, January 30th, 2026, we saw, let's just call it a metals meltdown after a very volatile year before. When I'll ask you, when you saw this 30% drawdown on silver and these losses going on with gold and platinum, what was going on in your mind?
Thank goodness, because they were severely technically overbought. I mean, silver, I don't really, I have to look and see what the high of it was, but I believe that it was something like 70% above that 200-day moving average. And even after that 30%, after that correction, spot gold was still like 40% above. Well, 10% is considered a lot. So really the only thing that was happening in these spot markets was a few things. Number one, it was also the technical markets that were breaking down with AI and all of that. And so there were margin calls because so many of the stocks and the commodities are bought with debt, right? So when they go down, then you got to come up with more money and you may not want to sell your spot gold or spot silver position. But if that's what the market will buy, you really don't have any choice. But really, to me, all that it really did was help alleviate an overbought, not overvalued. Those are two different things, but a technically overbought position. And frankly, did the physical metals move that fast? They don't because they're not a contract. They're physical and they're real. And you know what's interesting? And I don't know why I didn't do it before, but I actually sat down to count all the different places that the physical metals were actually used in the global economy. Because I talk about it all the time and I had some, but I actually thought that through. 33 different areas in the global economy use physical gold. 36 use physical silver. This is one place. This is one place. This is a digital representation of a cryptocurrency because they like to make it look like it's gold so that you think it's gold. It's not gold. So, and that's the point. One place in a battle like this. Is that what you want? Because we see what's happening with the retail investor in the cryptocurrency space, in the Bitcoin space, right? Or 33 demand, 36 demand. You know, give me the numbers. Because even though you might see prices ebb and flow like we used to do when we were actually on the gold standard, we didn't have booms and busts. We had ebbs and flows as the economy ebbed and flowed. But now in this system, with all this debt money printing, who has access to it when it has the highest level of purchasing power? Winners and losers have been chosen, and we, the public, are on that losing end of it. And my biggest battle, and we've known each other for a lot of years now, right? My biggest, most important battle, and a big part of the reason why we changed to Zang International is because we are really trying hard to get redeemable gold back in the global monetary system as we transition from the current system that's dead into the new system, which of course they want it to be digital. So there is this very interesting battle royale that is playing out, and it's going to be interesting to see what this looks like between the retail public that is getting really kind of disillusioned with the cryptocurrencies and moving away from them, while you have the corporations, the banks, the governments that are rushing headlong into developing that infrastructure, which means they're going to try and push it down our throats. Our opportunity is to create a quiet revolution when all you have to do is convert your fiat money that's losing value constantly by design into sound money. And Patrick, I think if we can get 3% of the global population to do that, then we got a shot at getting redeemable gold back in the system again. And if we do, that shifts the power back to the public. And if we don't, well, we're in a feudal society and our choices are gone and our freedoms are gone. That's not okay with me.
Yeah, I agree. I'm with you all the way there. That's why we're here. We do what we can for people to help them understand what's going on. And whether you're a stacker or an investor, there's a need for you to be holding some precious metals. So it's a great point. With the numbers, I want to share some numbers, and I hope I got these right. January 30th, keeping January 30th in mind, in the 1970s, gold rallied some 2,300% with multiple 20% plus corrections along the way. In the 2000s, gold rallied some 650% with 6 corrections exceeding 15%. So question here, and we kind of touched on this, with what we saw in January 30th, is this the first of many corrections or orchestrated corrections to come?
Well, yeah, yes, I would say that you could definitely say that, because as long as it's a paper market that's dictating price discovery, that's so easy to manipulate, and what we're really seeing is, this battle between markets wanting to keep control. But here's the thing, Patrick. Since it is so easy to control the paper markets, I mean, it costs virtually nothing to control 500 ounces of gold, 5,000 ounces of silver. That does not nor ever needs to exist. Why in the world why aren't we seeing spot gold at $20 an ounce, like this pre-33 coin has a face value of $20 an ounce, and this silver dollar, well, $1? Because they're losing control. So the spot market was specifically designed and openly designed to manipulate. And I have the evidence. If you want any of this, I'm happy to send you those links. I'm happy to send this to you. But the spot silver, the spot gold markets were really created for perception management, right? To manage how the public perceives gold and silver. Because if they can do that, and in all areas, I mean, that's what the government wants to do. That's what the central banker's job is. If they can manage how you perceive things, then they are manipulating and managing how you move forward in the direction that they want you to go. I'm suggesting we need to be independent thought leaders so that people can actually see the truth for themselves and have the ability to understand what's happening and put their own individual best interests first. And frankly, that's what gold and silver do. They protect your freedom and your rights. That's what they do. Physical, not paper.
Yeah, there was a time I was telling people that word financial freedom, or that term financial freedom, it may not or only necessarily mean how much fiat you have. Financial freedom means sound money. It could mean the gold or the silver or the precious metals that you have that are giving your finances freedom from what we're seeing going on in the world today.
Can can we just kind of expand that a little bit more? Because I know that you know my mantra, and I've come to understand that these are all forms of wealth and also a way to secure your freedom. And that has to do with local community. And those mantra pieces are we need to create surety in food, water, energy, security, barterability, which for me is primarily silver, but not only, but primarily. Wealth preservation, which for me is primarily gold, but again, not only. Community, so valuable because most people don't have the time to execute all of those pieces anymore. I started after 2008, as you know, and shelter, so we have a last stand. And if you are not dependent upon the grocery store, I mean, think about what happened. I don't know what happened in Singapore during COVID, but here in the US, those grocery store shelves were bare. You couldn't get the things that you needed, or at least that you thought that you needed. So if you can create surety locally in all of those areas so that you are not dependent on outside sources, that that supports your wealth, that supports your freedom, and that gives you all the tools that you need to say nope when the government says jump.
Yeah, amen to that. Silver and platinum, both of these metals are both in a supply deficit. Interestingly, they are both on the critical minerals list, and both, I'm going to say, being pulled into a resource war. We're seeing a resource war. How do you see silver and platinum moving this year?
Well, I think they're going to both in terms of currencies, fiat currencies, they're both going to go up substantially. I mean, it would not surprise me. And I don't care about this. I only care about this because viewers care about this, because I know that the spot markets are all just fiction. They are just fiction. They're a trading market. They don't reflect the true fundamental value of any of that. But in terms of what's happening and the transition from the paper markets losing control, and that's what I'm seeing, even with these big volatile moves, that's part of that indication. And into the resource, as you really wisely pointed out, we're going to for a minute anyway, a pure supply and demand market. And that's going to have a major impact on the premiums. Even as the paper markets might maintain some of that control as we're making that transition, look at the premiums that we're seeing above what the U.S. spot price is at the Shanghai Gold Exchange, right? I mean, that kind of says it all, doesn't it? Because why would you pay a premium if it's not worth it? Because you got to get your hands on it. It's a finite resource, all of them, including gold. That's all, anything physical. Even my coffee mug, right? There's only so many of them out there. Anything physical is limited. Yep.
Yeah, I totally agree with you there. I want to touch on central banks for a bit because they bought some, I believe, 863 tons of gold back in 2025, and they're on pace for 950 tons here in 2026. Lynette, what are central banks, the ones who create the money, seeing to continue the buildup of holding more gold in reserves?
They full well know what they are doing to degrade and remove whatever little bit of value yet remains in this stuff. And so they know that whoever can hold their purchasing power, whoever's holding the gold, that's where the power goes. So that's why you're seeing it. I mean, it's a very interesting shift from the West, from the US being the financial hub to the East being the financial hub. And central banks, I mean, their job is to regulate the rate and speed of inflation, not stop it, because the whole system is designed around it. And they actually know, and the Federal Reserve tells you themselves, not me telling you this, Go on the purchasing power of the consumer dollar on the FRED, the Federal Reserve Education Department, FRED. Everybody can do this. And you put in purchasing power of the consumer dollar. And it doesn't matter that it's the US dollar because everything gets judged against that anyway. So this is reflective of every single fiat currency out there. And officially, there's 3 cents left. But if you look on the axis, the left-hand axis, there's a big fat goose egg. It's zero. It has no value. That's the true fundamental value of it, according to the Federal Reserve and according to history. Because, do you know why it has no value? Because it doesn't cost anything to create. If our central bank is printing a $100 bill, and it wouldn't be this one because there's no strip in it, but a $100 bill, it costs them 9.6 cents to create and print this $100 bill. If it's just a digital entry, they push a button, it costs less than that. How can this have value if it costs nothing to create? And the other thing that I think is quite interesting, the last time I looked at it, so it's been a number of months, but the difference between that 9.6 cents and the $100, we have to work 100 times harder for it, but that's called seigniorage. And the government and the central bank, the Federal Reserve, well, that's their income. Is the difference between the cost of creating money and how much you and I have to pay for it. And they're in the weeds. In other words, they're losing money. For the last 4 or 5 years, the Federal Reserve, who is supposed to send any excess money that they don't use after they create all of this funny money and put it into the system to the Treasury, and they haven't been able to do it for the last 5 years. Right? I mean, think about this. They create this out of nothing. That's their income. Look at how much of this stuff that they've been creating. How in the world are they losing money? How in the world? They have no costs.
Yeah, it kind of makes me think here, just off the top of my head, where if we have these tariffs that are that are being imposed on countries because, let's just say, the U.S. is supposedly getting ripped off, I think maybe the tariff should have been pointed at the central banks for the money that, or the currency that they've been creating. That seems to be what's really taking a lot, or confiscating a lot away from people, their time and for what they've worked for.
By design,
Yeah.
right? I mean, that is, why does this cost 9 cents and I have to work 100 times harder for this? And I can't hold on to this because if I do, it buys me less and less and less and less. Its true value is zero. So if whatever it is that you're holding, stocks, cryptos, whatever it is, if you can only convert them back into the local currency, you're screwed.
To follow up a bit, the global central banks, they net sold 48 billion in dollar reserves in January alone. And the dollar's share of reserves just hit 58.2%. And this is a new low going back to 1995. Obviously, the move is going to be a move going away from the dollar. And we're clearly in a transition moving away from the dollar being the world's only reserve currency. In your view, what is it going to take, or what is going to actually replace or fulfill the role of the world's reserve currency? And I know you touched on gold here.
Well, I mean, if they have their druthers or if I have my druthers, because those two are two different. If they have their druthers, then we are going into a fully digital surveillance economy where they will control absolutely all of your choices. If I have my druthers, there is a component, at least 40% of redeemable gold in that digital currency. I'm not saying we have to go away from digital. We just need to marry the two and give the public the ability to pull the gold out if they don't like what the government's doing. So, yeah, what they want is, I mean, and we've seen it in China, right? The social scoring and all of that. So that is, how do you control a population? Well, that's where the whole world is headed if we allow it. We don't have to allow it, right? We can say no if you're independent. That's why that community piece locally, so that you have your choices, and globally to get redeemable gold back in the system again. We can do this, but the public has to come together, because they'll never, a government or a central bank, why in the world would they ever give up their money monopoly? They wouldn't.
Right. I guess the reason why I asked that question, because I was alluding to maybe 2, 3 years back when Jerome Powell had said that uh, he's open to the idea of more than one world reserve currency. So that always kind of stuck with me. Where
But Patrick, that actually has been true since 2000. The euro was created to take over as the world reserve currency. So as the reserves of the dollar has been declining over all of these years, and you brought up 95 and the euro was born in 99. None of this is a coincidence, right? None of it is a coincidence. It's a plan. But when it happens, and the public, at least here in the US, has been taught to think shorter and shorter and shorter and shorter terms. Oh, that happened 15 seconds ago. That's irrelevant. No, it's not irrelevant. You have to look at the long-term picture, because that's the way these shifts occur. If they happen overnight like that, then you and I know it, and we might not agree with it. But if it happens slowly, just like this soft ban that China did on the rehypothecation on the gold, what they're trying to do first is change habits slowly. And China's a very strategic thinker. They think in terms of 100 years, not 4 years or 2 years or 1 year, right? So they know that the easiest way to get everybody in line is to, well, all the central bankers know this, and the governments do too, is do it slowly. Have that inflation target at 2%, because they're still getting all of your wealth, but they're doing it at a level that for them creates price stability. What's price stability?
that's one of the mandates for the Fed. Price
Price.
stability.
But have you ever seen how they define price stability? Because I guarantee you it's different than mine and probably your definition. Price stability to me would be that gallon of milk stays the same over time. So it has a stable price stability. Governments, central bankers' definition of price stability is inflation at a low enough level that you, the public, the individual, do not change your purchasing habits, but rather will take on debt, which creates more money, in order to sustain your standard of living. And so they don't understand why people just can't get in line with this. After all, inflation, I love how they say this, inflation has come down. Really? Prices haven't come down. It's the speed that those prices that are going up that have slowed down, not stopped, not reversed. And that's the painful truth. And the sooner people recognize that, so that they can make a choice, we have to ask ourselves, is this okay with me? And you answer that question. If the answer is yes, you just keep doing what you're doing. If the answer is no, then you have to do something different.
These things, it all seems, you connect the dots on everything, and it seems that we're witnessing the world, whether we want to believe it or not, agree with it or not, the world, it is in a reset right now, and the pieces are
Oh,
moving on the
100%.
chessboard, right? And just in keeping things real here, this reset or global shift, we have to expect an economic or financial reset to happen either in tandem or along the way. Would you say, would this be a fair statement?
Well, I would actually say that inflation is resetting the value of the currency on a constant basis. So really in this reset economy, what we're really talking about is that we are at the very end, and I've studied currency life cycles, as you know, since 1987. I don't really know anybody else that's done that. And so when there's virtually no purchasing power left, and that's true officially, again, thank you, Federal Reserve, they're telling us out of the original dollar's worth of purchasing power, there's 3 cents. And there's that big fat zero on their charts. That's where not just the dollar, but all government debt-based currencies are headed. And so when you get to that level, which we have, 2008 is when the system died. Now you have to reset everything into a new system. And that's what that's what Bitcoin and all the digital, the stable coins and all of that stuff is about. And what gold and silver do is they hold your purchasing power intact to help you get and maintain what your standard of living, what the fiat money wealth you've managed to accumulate that you're choosing to hold on to. They hold everything intact to get to the other side successfully so that, oh my goodness, you actually have the principle to work with on the other side of this mess. And therefore, all along the way, you can take advantage of the opportunities that present, and you actually have wealth in the new system when most other people won't, so that you are in a much better position on the other side of this reset, because we can't stop it, nor should we. There's so much garbage in the system that, it's like the tide is out. We see all the junk on the bottom of the ocean and it's disgusting. That has to go away. So we have to have this major crisis to burn off all of that debt inflation and take us back, prepare us for the new system, which now that we know is created from debt. So they have to get rid of the unpayable debt that's out there, all countries, not just the US. And we need to be able to start off fresh, but it ain't going to be over. If we go into a full surveillance system, I have a lot of concerns, not about me. I'm fine. I know what I've done. I'm worried, and I'm not even worried about my family, to be honest with you, because again, I know what I've done, but I'm worried for all the families out there that don't understand what's happening, haven't gotten prepared. And that's it's so evil, Patrick. It's so evil what they do. And it's not okay with me. And that's why the battle.
Yeah, I totally understand. I agree with that too. I mean, the other half of this, I don't think people quite understand, whether it's the average Joe, the stacker, the investor, high net worth investor. I don't think they understand or may see that when you think of what's happening, it's almost as if, as people have equated it to when you pull that plug in the bathtub or in that sink and the water starts to go down, you don't really notice, and then that whirlpool starts and then it really starts to speed up and that's it. Do you kind of feel like we're in that phase where it's speeding up now?
Most definitely. Yes, I do. I was there in 1971 when we shifted to a pure debt-based system. And I remember the chaos. I remember the energy. There was almost like this frenetic energy. So anybody that's watching that was alive during that period of time, they're going to remember all of this. And all of this chaos and that whirling is intentional. Because a confused mind, a chaotic mind does nothing. And that means that you keep your wealth and you sit in the system without going to protect yourself. You might not realize that you have to, but yeah, most definitely, it is absolutely speeding up. Absolutely. I agree with you 100%. I've come to really understand over all these years that I've been doing this that it really isn't just my job to show you what's going on and help you understand it. And of course, my goal is to translate financial noise into understandable language so that you can make educated choices that puts your best interest first. But I've come to really also understand that a lot of my job is to give people hope. So it's not just here's all the doom and gloom. We can't help that, right? We are not at a place at the moment that can stop all the degradation that's been happening for many, many years. But we are in a place to make a difference in the future. And we are in a place to make a difference for each individual and the families and the community. And, we've also been taught over this period of time, it's divide and conquer, right? Because if we are not talking to each other, then we are not learning from each other and we are not discovering different points of view that might just help us in so many ways. And so if I disagree with you, then I hate your guts and I'm not talking to you. But the reality is even if you, and I know you're not, but even if you were my absolute worst enemy on the planet and wanted to say something to hurt me, right, there's going to be a grain of truth in there. And so I've come to understand that it's the hope because there are a lot of there's always opportunity and change as long as you're at the right place with the right asset at the right time. And that's easy because we've got lots of history to look at and see what that is. But it's also the opportunity to be our own sovereign inside of community, to open up that conversation again, for people to come together in unity, because then we can do anything. Because there's way more of us than there are of them. So I have a lot of hope for the future.
It's nice to hear. So I think the key thing you mentioned was community, and I remember way back in business school, our professor told us, uh, when nations trade, they talk to each other. When nations don't trade, they don't talk to each other. And it's the same for people. When people trade ideas, they speak. When they no longer trade ideas, um, maybe not necessarily care for one another, they don't speak. And I think out of all our investments that we do, maybe we need to reinvest back in ourselves and in our people on the left and right of us.
I could not agree with that more. Many years ago, I went to school in England, and I went with my very best friend in the whole world. And I have not shared this story really, but we went to London, and 19 years old, very, very naive, very naive. And everybody was so nice. And we were just very naive. And we happened to meet this person that, realized how vulnerable we were. And he kind of befriended us, but he was doing some weird things, which I won't get into, but he was doing some weird things when my friend was not in the room and then when I was not in the room. And what he did was he kept us separate so we couldn't talk about it. And then when we were lucky enough to be able to come together to start having that conversation, we could say, he did that. He did that to you. He did that to me, right? And we could start to see how evil that circumstance was. And fortunately, we managed to escape. But it was divide. And that's the same thing. And COVID, I think, had a lot. That was a big, in my opinion, that was a huge test. And look at how divided. I mean, we were already growing more divided by design. That started in the 70s. But COVID was really a big push where people just you didn't go out. We've got generations that grew up in their homes. They don't know how to socialize because they were just so isolated. So this is part of the plan, and it's not okay. That's why I'm always so glad to travel and have conversation. And on the live, you don't have to agree with me. You can't be a bigot, but other than that, every question gets answered. Every single one, even the ones that come in and they think they're going to be snotty or whatever, that's okay because it's communication. And that's what we need to do. And I agree. Community, since you and I have known each other, you've seen this shift, and community has become the single biggest effort that I have is to try and I have no idea how to do it. I'm just talking about it. I don't know.
Okay. Well, Lynette, I tell you what, I rarely ever get a chance to end the show on a positive note like this, where community works itself in to be a theme. So I think I'll end it with community and how out of all the investments we make with gold, silver, platinum, let's not forget to invest in people. And so, Lynette, I want to thank you for sharing your insights, and please tell us about Zang International and how people can follow you on social media.
We are all over the place as Zang International on YouTube and on TikTok, Instagram, Facebook. It's at Zang INTL, so ZANGINTL, and on X at the Lynette Zang, and LinkedIn Zang International. So we're all over the place. We're easy to find, and we're very prolific.
All right. Well, I'm gonna wish you the best of luck in this expanded endeavor. So, Lynette Zang, I do hope we can do this again soon, and let's look forward to the hope that we have.
Absolutely, because we can do this. I know we can. One person can't do it, but coming together in community, we can do this. And we can make a better life for the future. I know it 100%.
All right. Such a good way to end it on that. Lynette, I want to thank you again, and we'll be in touch. That was Lynette Zang from Zang International, sharing her views on precious metals and the economy. And this may be the year for you to reallocate your metals holdings. If you'd like to know how you can do just that, please do contact us at www.auctusmetals.com.